back in from break. We're here still at Lowcountry Money Talk because we have lots more to discuss today. Phil Bloyd, as you see, is with us still with Revolutionary Financial Group, and lots of questions to talk about. It's nice to have you back on the other side of the break.
Yeah.
Let's continue our discussion here.
All right.
So we talked before the break, in case you're just joining us, about bear markets. We're worried if we're going to have time to recover. Lots of conversation around that. And we did make some good ground on that topic. What we didn't get to talk about, though, yet is income allocation. Of course, folks worried if they're going to outlive the money that they have and the money they have coming in. So what can you give us advice-wise?
That's a big fear, Jessa. Back in the day when I started doing public engagements, we'll say, two of the largest fears. Public speaking was number one.
Isn't that funny? Yeah.
And number two was outliving their income, especially for retirees.
Maybe those should switch around.
Hey.
Maybe right now, especially.
What I always would tell people is, hey, we got a little bit of both of that, going on tonight at the seminar or whatever. But all seriousness, we have a lot of challenges these days for our income as we're retired. So let's say we're retired. First, we look at our income. Say we have Social Security coming in. That's a big part of most retirees' income. We did get a little bit of a pay raise. I think it was 5.9%, but inflation 7%.
That's right. So we're still down.
Okay.
That math I can do.
So Social Security. Some people may have a pension. We used to call them the dinosaur pensions because they're going away, being replaced by 401ks and such. But if I worked for the government or in some type of public job or something, I may have a pension where I get X amount of dollars a month for the rest of my life. And if I pass away, my spouse may receive part of that benefit as well. So we have those two things to start off with. Now the difference is, what are we spending a month? Okay, the best way to determine that is look at your checkbook.
Okay. Balance that checkbook, that's right.
So if we go back about 12 months, we get an idea of what our expenses are, what we're spending. So if we're in a deficit there, the money's got to come from somewhere. So that money in general would come from savings. If I'm over 72, I have to do my required minimum distribution from my IRA account or 401k or whatever it may be. So I'd also count that as income first. Then do I have accounts that pay dividends and interest and all that? So we look at that too. And it's like, do we still need more? And if the answer is yes, then we have to go to the savings side of things and say, okay, where are we going to get that income? The one thing that I hate doing, Jess, and I talk about it all the time, is I would hate to sell equities in a down position to get some income. So it's very important that we have some assets that if we get into that bear market where the stocks are pulling back and we have a lot of equities, growth equity stocks, funds, whatever they may be, we don't want to be selling those assets as they're retreating because when they recover, they won't recover as fast because we spend down some of the funds. So the idea would be to have a separate area where we can go and draw from assets that when the market pulls back, that these assets are stable. Now there's several forms of those. I don't want to get into all that today, but it's very important that we have, in my workshops or seminars, I always talk about having a bear IRA and a bull IRA. Real simple. So if we're in a bear market and I needed income, I would withdraw from the bear portion of the IRA, meaning that those funds would be stable and wouldn't deplete. As in the bull IRA, of course, those would be more growth oriented. So when the market is up, I withdraw from my gains. So it's very important to have that for income purposes, because if we don't plan income properly and people don't pay attention, they just jump in and take income from whatever asset they're thinking about. Well, when the market does recover, it's not going to be as effective.
Wow, what a smart way to think about that, so that you're really protected in either case, and talking about making the right decision based on what the market is doing. Obviously more questions.
Sure.
That was a great segment because lots of good information in there, but we have more to come, so I hope you'll stick with us in Lowcountry Money Talk. We will be right back.